After that, we will open for discussion. I think Professor Ahmed does have a PowerPoint presentation. So, yeah, he will go there. Thanks.
Professor Sam, thank you very much for a very kind introduction. Certainly, Middle East Economic Association, Economic Research Forum, both of them have a special place in my heart. I remember I completed my PhD back in 2005, and it was, I guess, in 2006. It was in Kuwait. I attended my first Economic Research Forum. And since then, I always enjoy to be here, especially this friendship, this affinity among the participants. It is really very much valued. And also yesterday, I had some kind of a retrospective thought on my mind, because I started at the World Bank I was working for Mustafa Nabli on a governance issues. There was a report at that time. And we were much more hopeful about the capacities of the states, what they will be delivering, and it will be more of a success story. At that time, it was expected to be. But with the yesterday's panels, we seem to be much more pessimistic about what the states can deliver. And even as Mustafa Nabli has mentioned yesterday, whether we learn from the research and we implement this in the policy making, it seems to be challenged also in recent years. So actually, that actually started me working on cryptocurrencies for almost 7 years now. I was working at the central bank, and when I was working at the central bank, it was not that possible to work on cryptocurrencies because it could be a wrong signal given to the market. But by then, even I know that this topic will be important, because in 2014 or 15, when our central bank governor went for BIS meetings, and the central bank governors come together, especially G20 countries' central bank governors come together in every 2 months, and they discuss global issues, and also they discuss some potential important topics. It should be like 2014, they start discussing about the blockchain. They even discuss kind of CBDCs at around that time. And I said, it should be an important topic, because if all those people are coming together and they discuss blockchain, it shouldn't be just about Bitcoin. It shouldn't be just about some young people coming up with some crazy ideas. But I didn't have the chance, and also I didn't have the public appearance to talk about cryptocurrencies up to 2017. After I left the central bank, I started working more on it. And this is quite related with my initial statement. I mean, most of the things, even in this conference, we expect a lot from governments, from the states, and their associated international partners like World Bank, IMF. But increasingly over time, actually, at least from my perspective, we should rely less and less to the governments, states, and we should devise some other tools to do the operations more efficiently. And the technology can be one of the solutions. And certainly the technology in money is coming with cryptocurrencies, even though this is more of a private initiatives. But it will remain with us, I believe. And the states, governments will produce some alternatives for it, because they are very much challenged. So let me bring you back to 2008. You remember this cryptocurrencies actually started somewhat with Bitcoin. It became popularized. And it was in 2009 when, if you remember, the Occupy Wall Street movements were taking place, and a group of anarchists, in a sense, came up with this idea, because there was a lack of trust to the existing regulatory bodies and lack of trust to the banks. So they say, okay, common story, the central banks are actually serving not for the main street, but for the Wall Street. And then they propagate this idea of cryptocurrencies and Bitcoin. And since then, certainly, cryptocurrencies, in spite of some slowdown in the last couple of years, they occupy quite a big fraction of the financial system, one way or another. And new technologies in money seem to be with us for a while, and we start seeing more of responses by the central banks. Is it moving? Where should I? Is it moving? Where should I direct? Okay. You may need to open. Is it open? Okay, if you can. So today I want to talk about the cryptocurrencies a bit, and especially on the MENA region. Recently, we have been approached by Georgetown Journal of International Economics, or I forget the name now, and we were asked to write about the MENA region and also Latin America region. So they had an observation that in the last year, thank you. In the last year, there is a, let me go from there. It's a Georgetown Journal of International Affairs. They ask us to write about the rise in cryptocurrency adoption in MENA and Latin America. And what is the reason for this? They really wonder. Why do they wonder? Because from 2021 to 2022, in 1 year time, the annual growth of the cryptocurrency transfers are actually about 48% for MENA and 40% for Latin America, Latin American countries, let's say. But I will mainly focus on the MENA countries. These are data coming from the blockchain transactions, transaction between exchanges and transaction between the wallets. So there is a digitalization of the digitalization data in there for sure. And this company, Chain Analysis, actually is providing such data. But this is an interesting observation. Why MENA is coming first in the growth rates? That has to be analyzed. Certainly that has to be analyzed with more data, but we want to have some preliminary ideas why it might be the case. So our objective is to understand the driving forces behind the demand for cryptocurrencies. These are some figures. For example, in Egypt, the growth rate is more than 200%. In Saudi Arabia, it is about 200%. In all, these are the countries that we choose. And in Lebanon, for example, it is more than 100%. So in most of the MENA countries, there's a huge growth in cryptocurrency transfers. These are not used, this is quite difficult to find data, but it is in terms of the transactions. And this is kind of a proxy that more and more people are using cryptocurrencies in the region. And that's actually, we didn't approach the journal, they approach us. Okay, something like that is happening. So why don't you write an article about it? Because we had some cryptocurrency papers earlier, mostly more on the empirical side, more on the asset pricing. But we also found the topic quite interesting and we delve into it. So, and we want to provide some kind of a framework why this might be the case. And we have a very basic framework discussing the push and pull factors. For the push factors, what we mean is the challenges within the traditional system. There are some challenges in the traditional system which push the people to use more and more cryptocurrencies. And there are some factors that are like the benefits of the cryptocurrency world. So we came up with this figure. This is our own kind of approach to the issue and summarize the case. So the upper part is the push factors, and from down it is pull factors, and at the end it leads to the demand for cryptocurrencies. And then we want to discuss it, global reasons and the local dynamics. There are certain local dynamics specific to countries related with exchange rate depreciation, related with inflation for specific countries, but there are also some global factors. We discussed that. But overall, for the push factors, we say the lack of trust in the financial system and institutions, both at the global level and the local level, plays a big role. And the second one is the economic and political instabilities, again at the global and the local levels. I will explain them a bit more later. These are the main push factors. And for the pull factors, we have more, like there's a perceived trust to cryptocurrencies. There's a perceived trust, for example, gold like Bitcoin. There is an anonymity which is increasingly becoming more and more important for certain group of countries, probably, and the investors and the citizens of those countries. And there might be another reason of alternative banking and payment systems, which we had a very nice panel before. So it's a part of fintech digitalization issues. So we can do certain things more efficiently. And when we use cryptocurrencies, it becomes even much more efficient. There is this argument for the pull factors why increasingly more some countries like UAE, like Saudi Arabia might want to invest on cryptocurrency related products. There is a profit opportunity for sure. That is for, I mean, all of a sudden, the cryptocurrency or at least Bitcoin rise up to $66,000, right? Some people got richer and there is a kind of a new rich emerge in a very short period of time. So nobody wants to have some sort of a FOMO being fear of lacking behind in this gold rush, let's say. There is this profit opportunity is one of the reasons for pull factor. And there's a hedge opportunity. It's an alternative asset. And there are some studies showing that it's a hedging instrument. And also overall, some countries probably even more realize that everything is becoming digital. We are talking about AI, metaverse. I mean, even hold the conference, right? We, as the previous section, as Mustafa Namda has mentioned, for example, we want to do more on digitalization, right? Because it seems to the future. So some countries might want to get ready for the future and they might want to invest more. So this is our main framework. And these are, again, just a summary of this. But let's look at, for example, the global uncertainties. The reason, one of the pull factors. There is a sharp rise in geopolitical risk with the Russia-Ukraine war. Right, it is just not the war, but aftermaths of the war, right? I mean, some sanctions came, some of the people couldn't hold their money in London, they have to move, and that might be affecting many countries, especially UAE might be beneficiary of this process. But there is an overall increasing sense of uncertainty about the future. It could be a geopolitical risk, it could be about technological risk, and so on. I mean, there is much more, even the title of the conference is somewhat reflecting it, right? We want to discuss about the future even more. It was not the case in 1990s, or it was not the case in early 2000s. It was more of a standard understanding we had, but right now we are much more concerned about the future. Among the pull factors, first of all, I mean, there are some finance papers showing that cryptocurrencies are good hedging instruments. This is a typical finance explanation. We didn't want to get into detail on this, but there are evidences for that. But more importantly, from a more systemic perspective, there might be a new system coming up. This system is mostly relying on the younger generations. They might be organizing in Reddit. They might be even defending certain companies or leading to the collapse of some hedge fund companies, which took place for about two years ago, if you might remember. So the small fish come together and then they can act together through the other digital channels, through Twitter, through Reddit. And these are new alternative financial systems emerging. So there is much more peer-to-peer lending. There is much more decentralized finance discussions taking place. And certainly cryptocurrencies are at the core of all these discussions. But overall, with regard to the MENA, probably MENA countries are lacking behind in terms of providing good financial services. And there are some studies that showing that the MENA is relatively lacking behind in providing certain financial services. And that might be also another reason, especially when it comes to remittances. Many of the MENA countries are either the sender of remittances or the receiver, for sure, and then increasingly more. There was one figure for Egypt, for example. Increasingly more and more Egyptians are using cryptocurrencies for cross-border transactions. It might be related with the local regulations. They don't want to exchange their currencies with the formal rates or the official rates. That might be the reason. But certainly, this cryptocurrencies are helping for the new financial system to function. Anonymity and perceived trust is a benefit for some group of countries. And more important, again, examples from UAE, from Saudi Arabia are important. For example, the Binance is trying to establish one of the centers in Middle East and North, in Dubai. And it will be kind of a central location for the MENA countries. They want to diversify their headquarters. They are not just want to operate from one country, but from different countries for reducing their risk. And the UAE government was quite receptive, and they tried to even attract the Binance into UAE, while some other countries are trying to get away from it. So in this paper, we discussed this pull and push factors in more detail, but this framework might be quite helpful, especially when it comes to the push factors. For example, some countries have high inflation rates. All of a sudden, there is much more concern about the exchange rate stability. Inflation rate is rising. So these are all helping cryptocurrency drives. And then we concluded then, but so this is the MENA side. So MENA seem to be disproportionately favoring cryptocurrencies, or there's increasing attention for cryptocurrencies. But overall, let me also discuss some most recent topics and trends. Overall, there is a decline in the cash utilization. There are several reasons for this, and I will not get into detail. But I will give one example. Recently, you know, there is an SVB case, and from there, I want to come to the CBDC case in the interest of time. Even though I talk about the cryptocurrencies, the other counterpart of the cryptocurrencies are actually central bank digital currencies. Because as I mentioned at the beginning, if the central bank governors coming together as early as 2014 at the BIS, and if they are discussing about the blockchain technologies and the CBDCs in a sense, they are being challenged, because the cryptocurrencies are one way or another are private monies, and they are challenging the sovereignties of the central banks in the generation of currencies. So they have to come up with alternative mechanism, and they have to control the market. And CBDCs are one channel. So you can think about the cryptocurrencies in one hand and the CBDCs on the other hand. Cryptocurrencies are not controlled, regulated. CBDCs are on the other hand. So these are for anarchists, let's say, or for libertarians in one sense. And the CBDCs are even the ones who want to control more of all transactions. And no wonder why China is leading the game in the CBDC adoption. Recently, we wrote another paper to analyze the case of CBDCs for the case of Silicon Valley Bank. We asked the question, if we had CBDCs taking in place, what would were we going to face the same SVB collapse case? And by the way, even the SVB case by itself is a modern day bank run, right? In the past, as rightly mentioned in one of the earlier slides by UN representative, whenever we have bank run, generally the regulators had some time. They declared bank holiday, or at least you have weekends. But right now, with digitalization, again with fintech, SVB has lost $45 billion of deposit in just single day. And then when the Federal Reserve wake up, it was too late anyway. And then, you know, the story. But we are suggesting that if we had the CBDCs, we can have some early warning mechanism, because everything, all the transactions, when we have the CBDCs, will be monitored by the central banks, and they can take early actions. But that could be a problem as well. Imagine all your transactions are being monitored by the central banks. Is it something that you want? And also it opens up new avenues for the central banks. Central banks can implement certain monetary policies through their CBDCs. There doesn't have to be just only one currency. There could be different currencies. Even the existing bonds right now could be like money, right? Because they have the secondary market. But a central bank can develop different CBDCs with different terms, with different targeted purposes. There could be good side of it. Like, for example, you can develop a CBDC during the time of global crisis, and you can say that you can only consume it for these products. And you might stimulate the economy, but it is at the expense of kind of reducing the freedom of individuals. So, and that's why, going back to the yesterday discussion, that how much role we want to attribute to the governments, how much role we want to attribute to the states will need to be discussed in the context of CBDCs even more. And there's an information gap in the SVB There are different forms of CBDCs. I don't want to get into discussion on this, but overall, all the central banks almost are trying to understand CBDCs. They have some pilot projects. There's a very good BIS is supporting them. Atlantic Council has a good, very good CBDC global watch program. And let me come to the MENA, and then let me stop there. I know I'm in the interest of time. For the MENA countries, overall, these are the figures for the MENA countries. Most of the MENA countries are exploring the CBDC options, but none of them are actually implementing it. Only in China, we have some implementations of CBDC, and Professor David Lee is quite near to the region, and he is quite knowledgeable on CBDCs. I'm sure he will elaborate more. But let me stop here, and then, inshallah, in the question and answer, we may continue. Thank you very much.
Thank you very much. Thank you, Dr. Aysen. I think we're going to go to the second presentation right away. Have the pleasure of introducing Professor David Lee. He is Professor of Finance, Singapore University of Social Science. And actually, Dr. Lee is the well-known world authority in the cryptocurrency. He has written a lot of pieces on the subject. He is the founder and advisor of the Federal Asset Management Group. He is also an independent non-executive director of the C-Hub Singh Limited. And in addition to a lot of other consultation, he is a chairman of Remuneration and Nomination Committee, a member and Audit Committee. So he has a lot of things and a lot of hats to wear. I'm going to, or the framework here, we're going to give Professor Lee 15 to 20 minutes to give his presentation, and then we will move to the third presenter. Professor David, this is the floor. Thanks.
Right. Good afternoon, everyone. My name is David Lee. It's a great pleasure to be here, sharing some of the ideas that I have. Today, I have about 10 to 15 minutes or maybe 20 minutes to share with you about the future of money. I have a few slides to show, so I hope you can see the slides on the screen. First, I would like to just do a very simple definition of what digital money is or digital currency is all about. First, we can look at the definition of the central bank issue digital currency, and sometimes it's known as CBDC. It is on the balance sheet of the central bank. You can see that there are many countries in Asia are looking into it. The Singapore MES has the Project Ubin from phase 1 to phase 5, which I'll talk about, and it's now in the commercialization stage with the private sector. And the China have the CNY, which is the renminbi or Chinese yuan. And the other type of central bank authorized, and few people realize that money issued by private companies have been in existence for a long time and still in existence. One country is Hong Kong. So Hong Kong government actually authorized commercial banks to issue currency. The Hong Kong MA only issued the $10 notes, and the rest are issued by 3 other private banks. You can see that in some of these central bank authorized digital currency, they do not really affect the money supply directly because you have to have a certain underlying assets. And in the case of Hong Kong, you have the Hong Kong dollars, you have the US dollar backing of that. And you can see at the bottom that the commercial banks and the delegate issuers are the one that issues the currency to the public. And we will not be surprised to see ECNY issued by private sector as Hong Kong start to promote cryptocurrency and the stable coins. And also you can see that in Cambodia, a very successful project is called Project Bakun, which I'll talk about, to de-dollarize. And that is something that has been very successful. And the other type of digital currency, it could be based on distributed ledger technology, or non-distributed ledger technology, which we can see that there are fiat stablecoin, non-fiat stablecoin, cryptocurrencies, and non-distributed ledger technology type of money tied to the fiat. So some of the examples at the bottom will be like USDT, USDC, Bitcoin, Ethereum, DAI, and also Gcash, QQ Coin, and some of the digital money issued by the private sector, but they're mainly actually in the form of deposits at the bank. Now, this is something that I go deeper into for Singapore. The Project Rubin has moved from phase 1 to phase 5, started maybe about 5 or 6 years ago. Now is going into commercialization, basically just to tokenize the Sing dollar on the distributed ledger in the proof of concept stage. And then Singapore has got a new Payments Act, different from Hong Kong, where they work on the Security Act and tweak that, because Singapore actually have the new payment acts and new payment companies that with licenses, and they also have the Omnibus Act passed in the Parliament for digital assets, and the latest is the purpose-bound money that will have the public-private sector partnership, that you see more and more private companies issuing their own cryptocurrencies or digital currencies. And Hong Kong and Thailand is working very rapidly, from 2 countries collaboration all the way to with UAE and also PBOC, Digital Currency Research Institute. They move from just central bank digital currencies to multi-country CBDC, basically to improve the wholesale cross-border network payment and also to overcome the pain points in the current traditional monetary system, which we have seen in the past, maybe in the past 15 years ago in the global financial crisis, okay, where the intermediaries have trust issues, and then we have the supply chain and all the letter of credit being suspended for a substantial period of time. And then you can see that China, of course, is taking a lead in the retail CBDC. They have gone from the pilot phase to beginning to implement in many cities. It started in 2016. It has been, it's about 7 years now. It's become very advanced in many ways. It can even be transacted offline and transacted when there's no electricity. So a lot of pain points that we think about in the digital economy is slowly being addressed by a lot of Asian countries, which are unknown to a lot of people in the rest of the world. Now, the most successful one is Project Bakun by Cambodia. The whole idea is to not to affect the money supply, but it's a fiat back, and they tokenize the Cambodia Ria, which is their own national currency, as well as the US dollars. 80% of transaction in Cambodia is based on US dollar, and they are trying to move away from that. And therefore, now they tokenize the Cambodian Ria. And this is basically what most of the Asian countries are doing, try to move away from the US dollar and de-dollarization. And they start using a lot of this permissional, PAN-only distributed ledger with core infrastructure maintained by the central bank. And the whole idea is the financial and corporate inclusion. Not only the banks will be in the real-time gross settlement payment system or in the clearing house, but with the distributed ledger, new payment licenses are being issued, and more startups and corporates are included in the payment system. And they promote the use of local currency and to ensure that they don't rely too much on the US dollar. And they reduce the use of cash-based transaction to mitigate the risk related to money laundering, terrorist financing, and also other financial crimes. I think there are many famous quotes, but today I just want to highlight 2. One is by Mr. Mark Carney, the former governor of Bank of England and Canada, and his view on the future of money. He believes that stablecoin should have access to central bank's balance sheet, and he also feels that the new form of money will make bank funding costs more expensive because it has the function of disintermediarize the current banking system, but help the corporate inclusion. And clearly that will lead to higher funding costs for the banks, but not necessary for the public. But that shouldn't dissuade the central bank from pursuing reform because it will give the public greater choice and better service. And he said that the bank should adapt to a more competitive environment, and turning to cryptocurrencies, he mentioned that it could end up being treated as a digital gold, especially for I think for the smaller countries where they have no not enough resources to build their own digital infrastructure for international remittances and transaction. And he also believes the CBDC and regulated stablecoin will dominate, and not to dismiss either non-fungible tokens or decentralized finance. Now, I think one thing that we need to understand is the rise of the Web3+, because everybody will talk about Web3+, and underneath that is the technology called blockchain, and the other one that everybody is familiar, which is generative AI, or better known as ChatGPT. You will see that those are the technology that will infiltrate through our digital economy. And if you look at the definition of Web 3.0, it is a next generation of internet focused on decentralizing the user data and privacy, and aims to improve efficiency and intelligence of the internet using AI by connecting and reading data from various websites, also emphasizing user privacy and data ownership. And I want to emphasize user privacy and data ownership because that will become more and more important as we use more and more ChatGPT and other generative AI. And this is why Europe is to set out a council to look into how to regulate AI and to ensure that we have ethical design for all the technology that we have. And this has implication for Web3, and we need to understand what it's about. What's Web 3.0? What's Web 3? And Web 3 means that it has to include the use of blockchain. And Web 3.0 need not be DLT or blockchain, but Web 3 plus is all possible implementation of Web 3, including blockchain technology and cryptocurrency. And cryptocurrency, whether in the form of public-private sector partnership or purely non-governmental cryptocurrency, will be a form of reward to ensure data and privacy protection. And that will be apparent as we have more hacking, and apparent when we start to use more ChatGPT in our daily life. Now, the main difference between Web 2.0 and Web 3 plus is that Web 2.0 read and write, we can contribute the data to the platform supplier, but Web 3 plus, we own the data itself. And the data could be in the form of CBDC, the data could be in the form of public-private sector cryptocurrency, or it could be in the form of pure cryptocurrency, which is non-governmental. And the whole idea of Web3 plus is to have data and privacy protection. And that is the main reason why we cannot dismiss cryptocurrency and the PPP cryptocurrency encouraged by government. Okay, so this is what it is, AI plus blockchain plus cryptocurrency and plus the rest of the technology. AIGC, AI generated content, where ownership and usage will have to be clearly defined by a reward system, either by CBDC or cryptocurrency, may be the main driver as privacy and data protection becomes a major concern. Now, Web3 could be the only way we can grow, because in the traditional economy, we have grown to a time where it is difficult to push the economy any further because of a lot of other reasons. And if we are thinking of a digital economy, then this technology gives the user strong and verifiable guarantees about the information they are receiving, what information they're giving away, and what they are paying, and what they're receiving in return, especially with so many fake videos, fake currencies, as well as fake avatar or fake person communication that we have. So this is to empower the user to act for themselves, and also the foundation of the freedom of the individual against the arbitrary authority of the despot. This is very important to notice that government themselves may be out of control, not because government is not benevolent, but rather criminal groups can take over the centralized ledger and they will be in control. And I can tell you that the dark net in the digital space is a lot more advanced than the government in many aspects and in many countries. Now, the other famous citation that I want to quote here is the Deputy Prime Minister of Singapore. And in a recent call to the public is that we must remain open mind to approach Web3, and that includes the cryptocurrency and blockchain. And for Singapore, it is yes to digital asset innovation and no to cryptocurrency speculation. Note that the Singapore government did not say no to cryptocurrency because they know that cryptocurrency do have its use. And this is where the Singapore government position is. So in that aspect, there are many, many projects. One of the projects is Project Guardian that explore potential decentralized finance application in wholesale funding markets. And I emphasize DeFi. Okay? And you can see that banks are joining in. DBS Bank, which is the largest bank in Asia, having a cryptocurrency exchange with DeFi. The government is using Ethereum as a form for issuing university certificate. JP Morgan, SBI Digital Asset, they tokenize Singapore government securities bond on Ethereum, Japanese government bond, Japanese yen, and Singapore dollar. And there are other DeFi projects related to cryptocurrency, such as Digital FT in the Sandbox by the Monetary Authority of Singapore. And the other project by MES is the public sector and private sector partnership, which is to issue a form of programmable money. Okay, they explore various design and technical aspects pertinent to retail CBDC for Singapore. So here, phase one is the purpose-bound money. This is the programmable payment and programmable money with private companies. Government allowing private companies to issue cryptocurrencies. And PBMs are bearer instruments with self-contained programmable logic and transferable between two parties without intermediaries. Now, I think the other real driver is about taxation. The other real driver is about climate change. I make a very bold statement that ESG, especially about sustainability, will continue to be perceived as scams if there's no Web3. Because you have to ensure that the supply chain is tokenized. You have to ensure that the carbon emission is tokenized. And you have to also ensure that the carbon credits are tokenized so that it's traceable, it's transparent, and in order to avoid all the greenwashing. So this is something that in the Project Greenprint of Singapore, we emphasize the importance of tokenizing the carbon emission and carbon credits, and also the entire supply chain. China is another big proponent for this, and this could be the major driver for the Web3 Plus and the cryptocurrency. So you see that Singapore is already having all these exchanges being set up. So in conclusion, stable coins will need a peer-to-peer payment system to be effective, and some form of reward in the form of cryptocurrency, whether public sector, private sector cryptocurrency, or purely private sector cryptocurrency is needed. More and more Asian governments are using Bitcoin and other technology to design CBDC. For example, unspent transaction output or UTXO. Look at China, look at Hong Kong, look at many countries. They're all looking into Bitcoin technology to design the CBDC. We'll be seeing more public-private partnerships between Asian governments and cryptocurrency or Web3 platforms. And I mean Ethereum, I mean Bitcoin, and MCBDCs will eventually be popularized by Asian governments who are searching for cheaper, real-time. The real-time gross settlements are not real-time. Okay? They are periodic settlement. We are here talking about real-time using distributed ledger technology, safer, and an alternative for payments versus payment, as well as payments versus delivery of digital asset system. And this is what Singapore government is looking into together with many other countries like Hong Kong, Thailand, Cambodia, and many other countries. The experiment of Singapore Project Nexus, which is another project by the Monetary Authority of Singapore for cross-border remittances, outlines the challenges of interoperability, market making, different regulation, different culture, and also geopolitical consideration, which Dr. Ahmad has talked about, may drive the adoption of cryptocurrencies and stablecoins in Asia. For example, Hong Kong. China bans cryptocurrency in China, but it allows for cryptocurrency to flourish in Hong Kong for only one reason, because they are just preparing the time where they will switch from the Hong Kong dollar being backed by US dollar to become backed by renminbi, and also globally. And cryptocurrency system with a more centralized second layer, okay, and DeFi has certain advantages either as an alternative cross-border payment system or as a form of reserve for smaller countries without much resources to build their own digital infrastructure. This is the position of Singapore. This is a position of a lot of international organizations, and the value of cryptocurrencies will only be apparent as more private money are popularized by the governments. So that's my sharing today. I don't know whether they're right or wrong, but this is the current trend I'm seeing in Asia. I hope my sharing can generate more discussion later. Thank you very much for giving me an opportunity to share with everyone.
Thank you, Professor David Lee, very much. We really appreciate the insights. And I warned in the beginning of this session about sharing a session right after lunch. I think I am right. There is a lot of people who are dozing off now. I used to teach, I think Steve knows that. I used to teach in a regional campus where people work and then they come to the class by the end of their shift and they are really tired. So when I go to this class, I have a pot of coffee in one hand and the styrofoam cups in the other, and I move around giving everybody a cup of coffee. Now I remember that I should have done that. Having said about lunch, there is an announcement I need to make tomorrow. We'll take half an hour from 3:30 to 4 o'clock. We will take you into what we call here at Nile University, Nile Panur. There is a lot of people who ask about what is Nile University. Since you are here, you should not leave without getting a glimpse about what is Nile University. Nile Panur, from the name, is an entrepreneurial center. It is financed by the central bank for the last 4 years. And tomorrow we'll take you just for half an hour from 3:30 to 4 o'clock to take a look at this Nile Panur Center. I just want to warn the folks who dozed off that our photographer over here took 100 pictures of each one. So I'm sure he will blackmail them. That's the case. Let me move on. I really have a distinct pleasure of introducing a really good old friend of mine, Professor Stephen Shakety. Steve, I looked at his bio right now, and he doesn't mention Ohio State. He has been a colleague at Ohio State for some time. Actually, Steve was in the committee that has given me tenure at Ohio State, if I remember correctly. Steve is, of course, a good guy, Tarek. Is the Rosen Chair now in International Finance at the Brandeis International Business School. He's a Vice Chair of the Advisory Scientific Committee of the European Systematic Risk Board, Research Associate of the NBER, the National Bureau of Economic Research, and a Research Fellow of the Center for Economic Policy Research. It's a very long CV. I just have to say that he was actually served at one point of time as the Vice President and Director of Research at the Federal Reserve of New York. And right now he has probably the mostly widely used textbook on money and banking. People who teach money and banking, I think Steve Book has moved the Michigan textbook to the side. I'm very, very happy that Steve has accepted to be in this panel. And I know his views on the digital currency and cryptocurrency because I read his blogs and I subscribe to this view quite a bit. I have to say that we had a very memorable adventure together in the Gulf. We went, I believe, to Qatar and the Emirates together. And I'm very hopeful that he will be able to come and visit us here at Nanyang University. Steve, the floor is yours.
Well, thank you very much, Hassan. And it really is my pleasure. And my biggest regret is that I cannot be there with you in person. And I do hope that in the not too distant future, I'm able to come and visit Cairo and visit you and your colleagues and see you again. Because as you said, we've had a number of adventures together over the last 30 plus years. There are many issues that have been raised by Professors Ihsan and Lee, and I won't be able to cover all of them. I have a number of comments regarding what they said, but let me just start out by saying that when I first encountered crypto now over a decade ago, I was skeptical. Over the years, my skepticism has turned to hostility, and now I would characterize it as extreme hostility for a number of reasons. I will say that I think that the crypto world has been very clever in appropriating the vocabulary of finance, calling things assets and currencies when they basically have nothing to do with either of those. Let me make a number of points about the future of money and the general topic of this panel. So my first point is that money, as we think about it, is a nationally created and governed instrument that relies on local legal structures. It may be used internationally, but the international use of certain currencies is a matter of choice and convenience. There are significant network externalities involved, so that one currency tends to dominate internationally. And at the moment, that tends to be the dollar. The dollar's been dominant since about the 1920s when it replaced the British pound. The second thing is that in advanced economies, the financial system operates 24 hours a day, 7 days a week, 365 days a year already. And everything has been digital for a long time. Over 90% of payments instruments are digital, and importantly, they're privately issued. So banks are issuing these payments instruments. That's what I think of as my bank account balance. It's not public in any way, but there is the ability to have ultimate settlement and finality of transactions on central banks' balance sheets. And this, I think, is extremely an important element of the system. But what it does is it uses wholesale digital liabilities of the central bank, not retail. Just to be clear, we have wholesale central bank digital currencies already, and we've had them for a very long time. They're called reserve balances, and they belong to commercial banks or to the limited number of actors that are allowed to hold accounts at the central bank. Of course, it was the case that for many years in a number of countries, individuals could hold accounts at central banks. That's not generally true today, but I'll come back to that in a moment. Now, to emphasize the point then, virtually all of the financial transactions that we engage in use privately run payments networks to transfer the private liabilities of commercial banks. Now, I'll just as an aside, the subject of stablecoins came up in Professor Lee's comments. Stablecoins, as far as I can tell, are a version of bank deposits, and stablecoin issuers are narrow banks. And so when former Bank of England Governor Mark Carney mentioned that stablecoin issuers should have access to the central bank balance sheet, what he was really saying, in my view, is that they should be banks. And I have no problem with that. If stablecoin issuers want to be banks, they're narrow banks. Now, the fact is, though, that nothing's stopping this from happening now, so it doesn't look like this meets the market test. But in general, then, back to the main point, governance and regulation has adapted to this digitization over decades. Again, any bank account that any of us have had, regardless of the age of anyone who's here today, has been digital for our entire lives. This system is very efficient and it's relatively cheap. It does have some challenges remaining, especially I think in emerging markets. So, and those challenges include the fact that transactions are still too expensive, and they're in some cases slow, especially cross-border transactions. Financial access is also limited, and this is true especially for the least well-off. In some countries, there is difficulty in distributing government benefits in certain ways, and we also have difficulty in a lot of cases in controlling illicit activity. Although in that case, as I'll describe in a moment, I think that crypto it makes things worse, not better. So how is it that we can solve these problems? How is it that we can improve the payment system? How can we improve financial access? And how can we counter tax evasion and the criminal use of money? On improving the payment system, we already see, I think, public-private partnerships that are moving to provide cheaper, faster, more reliable, and more accessible systems that operate both within and across borders. Professor Lee mentioned some of these. These are not crypto systems, by the way. Crypto systems arise because of the dissatisfaction with people, or the desire of people to evade government controls. So, but in the advanced world, if I look, the Eurosystem has a real-time retail level payment system that guarantees processing time of 10 seconds with a cost of 0.2 euro cents per transaction. The Bank of England has similar transactions with a 2-hour maximum, with a maximum value of £250,000. A group of commercial banks is working in the Nordic countries to create a cross-currency real-time system called P27 that is going to instantly clear both domestic and cross-border transactions in the 5 currencies of the Nordic countries and across those transactions. In the US, the clearinghouse has a real-time payment system, and the Fed is launching FedNow within a couple of months. So on payments, I think we have work to do. We should be making these systems interoperable across countries, although that's cross borders, although that's quite complex to do. And we should be reducing the cost of payments across borders. But again, I think some of this has to do with some problems that are related to access, because the most costly cross-border payments, of course, are not the ones that those of us who are here today would engage in. Our cross-border payments are actually quite cheap so long as they're bank to bank. But the important thing about bank-to-bank payments is that the identity verification, the know your customer and AML protocols are being met by the banks on both sides. So the payments provider who is providing the rails for those cross-border payments need not actually do that. And that stuff's expensive. And that's why things like Western Union are expensive. It's because of identity verification. So this brings me to access. Now here I find the case of India to be very instructive. Starting in 2014, the Indian government provided a no-thrills bank account without charge to anyone using the country's what had already been universal required biometric personal identification system. So the required biometric personal identification, every person in India has a 16-digit number that's associated with their biometric personal information. Now, in a period of just a few years, 4 years, I think this is extraordinary, this project brought roughly 450 million people into the financial system. Now, I take 2 things away from this Indian experience. The first is that we need some sort of global personal identification system if we hope to overcome what is the most expensive part of financial access and the most expensive part of cross-border transfers, and that is identification and knowing your customer protocols. And so the second one, though, is that we need government subsidies. Remember, the reason that most people don't have bank accounts is that they don't have any money. It is true that there are other people that don't have bank accounts. There's some people that have been banned because they're criminals from the financial system. There are other people who choose not to because they don't trust it for one reason or another. I'm not going to worry much about those people. But the other people I do worry about are poor. These people we can help, but only if the government subsidizes what they're doing. So again, the lesson is that major improvements to access require government involvement through personal identification and probably subsidies. Now, finally, what is the best way to counter tax evasion and criminal use of money? Now, here again, we have serious problems, and I would start, of course, by eliminating paper banknotes that are anything larger than about $20 US or 20 euros in value. I guess Bahrain has the biggest known banknote, which is close to $10,000 in value. Things like this are a problem. But beyond that, the problem is tax havens and uncooperative jurisdictions. Decentralized financial systems that allow the implementation of transactions while concealing identities are also a serious problem. And so we need to actually find a way to police those. I would largely ban them, but I'll come to that in a minute. So turning to crypto, here I have a very clear view, and that is that we should work very hard to get rid of this stuff. It has virtually no socially redeeming uses. It facilitates criminal activity, fraud, money laundering, and the like, and regulatory arbitrage. In my view, if you can get rid of the criminals and you can get rid of the regulatory arbitrage, you're going to get rid of the crypto. The crypto, as we see it, as I see it, so far has been primarily a pyramid scheme. Now, what about the technology? Can the technology be useful? So far, we've had almost 15 years of an enormous amount of resources, both financial resources and human intelligence go into this. And I'm still waiting for the use case to come out of this that's really compelling. I do not see use cases in finance, however, because this stuff is going to always be slow and vulnerable to attacks. It's slow because distributed ledgers are going to always be constrained by the speed of light and the need to transact, and the need for us to ensure that financial transactions occur in time-stamped order. So that means that everybody always has to have the current version of the ledger before another transaction can be processed. This means that we're restricted by the ability to transfer that information, and that information goes over fiber optic cables at the speed of light. And the speed of light is something that maybe we'll beat that, but not I think in the near future for sure. These things are also vulnerable to attacks. Both proof of work and proof of stake systems are vulnerable to attacks. Eric Budish of the University of Chicago has described this very eloquently, so I will not, and it's complicated, so I can't have time to repeat it here. But what I want you to keep in mind really is that this stuff is just databases and code. And I see no advantages to the particular version of the database and code, to the particular protocols that crypto uses. Centralization that we have now is fast. It processes, for instance, in the case of Visa, up to 25,000 transactions per second. In the case of the Depository and Trust and Clearing Corporation, it clears 25,000 transactions per second, and it's secure. Is there any advantage to centralized blockchains over what we have, which is what we're going to have? I don't see it, at least not yet. Now, there was mention in his very comprehensive comments, Dr. Lee mentioned the idea of programmability. I'm all for programmability, but we have programmability already, at least as far as I can tell. It's how I pay my utility bills. My utility bills are paid automatically by the utility company sending a message to the bank. The bank has approval from me then on a particular day, agreed upon day at a particular agreed upon time to send my payment to the utility company. In fact, I pay almost all of my bills that way. And so what's the advantage of that? Also, T+0 settlement. T+0 settlement is something that nobody really wants. T+0 settlement requires that there be enormous enormous inventories, both of securities and of cash, in order to make sure that things run. Right now, we get a lot of intraday netting, so we could have clearing that occurred once a day, or maybe even more than once a day, but it would have to be it needs to be batch processed. Now, finally, let me mention central bank digital currency. In my view, this is very risky and very dangerous. And I believe actually that there should be the equivalent of a nuclear test ban treaty that countries agree not to do this. First, let me define what I mean by this. Dr. Lee actually did mention this. Universal, in my view, central bank digital currency needs to be universally accessible in a system in which individuals can hold unlimited amounts of interest-bearing central bank liabilities. And to ensure then that the system doesn't facilitate criminal activity, it's going to have to be account-based, with holders being identifiable to the government. And this would assure that private bank liabilities that are used for transactions are always convertible into central bank money under virtually all conditions, which I should say is the reason that we have central banks. This requires an elastic supply of CBDC. So there are at least three reasons why this is extremely risky. First, it risks intermediation. As Dr. Hassan said, that we might have gotten an early indication of what was happening at SVB from having central bank digital currency. I actually think that this would have facilitated not just a run on SVB, but on all sorts of other banks in the U.S. So while there's some inertia in the system that might keep funds in the banking system for some time, financial strains like what we saw in March would eventually prompt uninsured and possibly insured deposits to flee private banks for the central bank. Now, as the funds shifted, sources of private credit are going to dry up, driving the central bank to become the commercial lender. So the other thing that CBDC is going to do is it's going to turn the central bank into a state bank that allocates credit, with, I should say, political interference. And so I'm very much against this. Now, second, the issuance of central bank digital currency risks currency substitution. Imagine going back to Dr. Lee's example about Cambodia and a lot of Asia that's dollarized. Imagine what would happen in those countries if the Federal Reserve were to offer CBDC through a wallet that it maintained. It would not be able to keep Cambodians or others outside of the US from using it. So anyone in a less trustworthy jurisdiction would shift into the central bank digital currency issued by a trusted central bank. It need not be the Fed. It could be the European Central Bank, or possibly some others. Now, given this high demand for paper currency in the U.S., remember that through the pandemic, U.S. paper currency supply in circulation went way up. I think the consequences of this, if the U.S. were to do it, for the financial and monetary systems of emerging markets would be catastrophic. Finally, I think it endangers privacy. CBDC allows governments to monitor virtually all transactions. In free societies, it'll be essential to have credible safeguards to ensure that private information is not used by malevolent official sector actors. I do not see much hope. I should say my computer scientist experts tell me that zero knowledge proofs that have been mooted as a possible solution to this are not likely to work, because they're way too slow and too computationally intensive. So overall, just to close, and I've gone on for too long, I see, if I look at the future of money, I hope what I see is more of the same, which is that we have the system that we have now, just improved from what it is, to improve access and to improve payments and to lower costs. So let me close there, and I look forward to the discussion.
Thank you very much. As usual, very comprehensive and very opinionative. As you can see, the position of Professor Shaketi is well known. I have to say that under the influence of Steve, I was interviewed 3 years ago in Qatar, actually, about the prospect of the the digital currency or the cryptocurrency, and I made the analogy to the pyramids scheme, which is in a sense, the philosophy is very much the same, because nobody knows what is the value that you are basically exchanging in this case. That to add salt to the wound, about 2 months ago, I was also asked by some researcher from the World Economic Forum about the recent collapse of the cryptocurrency that happened. And the irony, it was called the stable coin, as you probably mentioned. And I said, maybe there is something in the name. You know, we have people who would say that I am the most honest, whereas in the end, something happened that proved that they were not the same at all. The introduction, and this is the question to Professor Lee, the introduction of the AI to the technology beneath the cryptocurrency is now taken as the most trusted. How about all the issues about even the moratorium that was called for by most of the experts in the AI, how this might impact the technology that is given here as the basis for it. Since I have the mic, I'm going to also ask the question of the reliability of some of the data we have seen. I did talk to Professor Ahmed Aiset before about the data related to the Middle East, because believe it or not, in Egypt, the central bank is criminalizing, making it a crime to use the cryptocurrency. Whereas the data said that in Egypt, the usage has increased quite a bit. It's actually illegal in Egypt to use the cryptocurrency, as far as I know. So I wonder from where this what is the source of it? Because I did talk to the people in the central bank about this a couple of times, and they do not actually acknowledge it. Last question, April 10th, there was the spring meeting in Washington, D.C., and I heard a release from the committee and the IMF. It's called the Digital Currency Committee. And apparently they have issued what they call the universal digital currency. And they even give it the symbol that they're going to be using. And they are in the process of preparing a manual for issuing the cryptocurrency as far as central banks are concerned. That's the CDs, the central CBCD, Central Bank Digital Currency. I wonder if Professor Steve will comment on this, how the IMF may intervene, either to correct or not. So I'm going to give the floor to the presenter by the order that they have taken, Professor Aiset, and then Professor Lee, and then Professor Sheketi.
Thank you. Thank you, Professor Hassan. I guess the second question is related with my presentation. This data is not that reliable, I should say, because it's not like provided by the central banks. And even here, you see the importance of the states. One another, I mean, this chain analysis is one of the companies. But the good thing is that they are claiming that they are getting this data from the wallets, and everything is digital, everything is registered. Even they have the more chance to know actually that this transfer is taking place. But certainly some of the exchanges might not be transferring. There are lots of data issues there, but it is quite possible. For example, in Nigeria, they try to implement CBDCs, and implementation of CBDCs idea even led to more usage of cryptocurrencies. And this is my actually somewhat also question to Stephen Cecchetty. I agree with him. The reason why I'm working on the CBDCs is not necessarily that I am supporting it. I am against it with the very similar reasons. I don't want the governments to check each and every transactions. And I don't want the governments at some point to decide on what to consume on my behalf. Because I mean, if there is an economic crisis or something, then there will be much more role given to the central banks, and the central banks, just for the sake of stimulating economy or with that sort of intention, they might control the people or they might direct the people. But my question to Steven Cecchetty is that if the CBDCs come, do you still resist against the cryptocurrencies? Because it is kind of the other side of the picture. Thank you.
Thank you, Professor Isat. Professor Lee, David Lee.
Okay, I didn't hear clearly about the question. I suppose it's the inflation as well as the second question. Is that right? How do you see CBD solve the print inflation trap, as well as why there's a fear of government spying on people? Are there questions there?
Yeah, I thought the question was about the AI technology as the basis for the digital currency. If the same kind of code of ethics being penetrated by the AI, how about the cryptocurrency?
Yeah, I think that's one of the most important questions. I think Professor Cecchetty as well as Dr. Ahmad has presented very clear, analysis and argument. But at the end of the day, it is about privacy protection and data integrity. And as we know, money over time will change its form because of technology. We started from commodity to paper to credit card to real-time gross settlement and clearinghouse. And now we are going to a situation where after 2008, when you have a banking crisis, when banks started to collapse, when the fractional reserve system is in question, then we tend to look for new technology. But as we are looking for technology, to answer the question is about looking at the basic idea of what this digital economy is about. If it's about digital currency, it has to be the payment system. And if it's the payment system, what do you want in there? And I think the two most important for question 1 and 2 will be, first of all, privacy protection. Second is the data integrity. Third is the disciplinary transparency on the government themselves. Because if we talk about inflation, it has to be the case that there's too much money chasing too few goods, and it doesn't seem that the QE has any impact on inflation. And then we started seeing that because of onshoring, because of the war, because of the international tension. But eventually it will come and you weaken the entire banking system. And this is where AI argument or privacy protection will come into the entire space. Every day the banks are being hacked. You will talk to bankers, there will be downtime. Every day they are concerned because they're using centralized ledger. So the whole idea of using distributed ledger is that in the first layer, you have to be transparent and traceable, but it is not good for a payment system. Therefore, you use the second layer, which is more centralized, and the transaction speed actually increased tremendously. And that's why the credit cards company are using the second layer, either for Bitcoin or for Ethereum. I'm not suggesting that we should use cryptocurrency, but we should seriously look at the base layer where privacy protection, because new technology offer us privacy protection. New technology offer us data transparency and protection. And there's no reason why we should not make use of the new technology. And also that the current fractional reserve system, if you go back to 1920, is beginning to die function. We are seeing central bank buying junk bonds. We are seeing central banks continue to print in a competitive way. It becomes very synchronized as well. And that is what is so scary in many aspects about synchronization of printing. Of course, China is printing, US is trying to tighten, and the next day they're announcing that they may be doing further QE. But the more important is about centralized versus decentralized ledger. And that's important. We cannot compromise security and privacy, whether it is in money or it is in AI, is in any other things that we do online. So with
Excellent.
that argument, I think it is therefore important for us to look at even further using wallet to ensure that identity is layering, right? You look at China, there are 5 layers of identity. It doesn't mean that everybody has to disclose everything about their person. If you are just doing $10 transaction, just a phone number, that will do.
All right, thank you.
And so on, yeah.
Thank you very much, Professor Lee. Steve, if you have comment there.
Yeah, just a few things. So first of all, you know, on the role of the IMF, I mean, I think the IMF often reflects its reflects the sensibilities of a number of its members, and its members seem to think that some of this stuff is useful. I'm quite confused by why they think that, but I can tell you, having been in charge of the cooperative activities at the BIS when I was there for a number of years, your personal opinions are not always the ones that will come up, because the members want support for things that they think are important. The fact that I think that this is a disaster, and maybe some of the people in the IMF do as well, does not mean that that's going to come through. Now, a few things. The first point I think here is to think about what is it that's wrong with the payment system today that this solves. I don't see that it solves much, and so that's sort of and Dr. Lee mentioned a layered approach, which of course is the approach that currently exists today, because it sits on top. This stuff, the banks sit on top of the central bank balance sheets, and the payment service providers sit on top of the banks. Now, so the only way to get the speed that we need is through centralization. We could have decentralization once we have batching, but it's not clear to me why you would actually need that. I mean, most of the crypto world at this point is in fact centralized anyway, because otherwise it wouldn't function. And there are also centralization points that are important to keep in mind, like the fact that somebody's maintaining these blockchains. It's a very small number of people. Now, Professor Ihsan asked about CBDC versus crypto. My sense is that the only justification that I can come up with for CBDC is that it can kill crypto.
Mm-hmm.
So if you say I can't kill crypto any other way, then, well, maybe now I'll just produce CBDC, and CBDC is going to kill this stuff that I think is really bad news. And so I think that's that's the only possibility.
Yeah. Thank you very much, Steve. We're going to open the floor for 3 questions. Please use your name and a very quick question, because we have only 10 minutes. Please go ahead, the lady.
Okay, my name is Dr. Zena Munir, affiliated with American University in Cairo. Thanks, first of all, for the intervention of the great speakers. I have a question for the second speaker, Professor Lee. You touched upon like the greenwashing and the carbon markets in your presentation, and actually, I have a question in this regard. Under the logic of carbon credit, nature has been transformed into like commodity that can be traded and sold, and actually, carbon markets are associated with claims of greenwashing, where big polluters such as oil companies can continue emissions and go elsewhere and buy like carbon credits from elsewhere, and this actually undermine the process of just a green transition. So how, given that the carbon markets are like spreading in the MENA region, with the fact that Egypt is approving the launch of the first carbon market in the MENA region, how do you see the future of the carbon markets in the MENA region? How such markets can be governed in a way that achieve just the green transition and eliminate any factors of injustice or being untransparent? Thank you.
All right. Second question, Dr. Mohammed.
Sorry.
You have a question?
Thank you, Dr. Hassan. This is very important issue about cryptocurrency and the future. My question is simple. Money is about value. When you see the cryptocurrency increase, as you mentioned, and people becoming very rich of this, do we have any reason why this happened, except the pyramid scheme that we know about, which is you don't have any fundamental reason why the value. And also you cannot guarantee that this value would be lost very soon and for no good reason. We cannot depend on something like this until the fundamental is clear. Thank you very much.
Thank you. Shireen, you have question from the audience on Zoom, please.
Thank you very much. There are 4 questions. How do you see CBDCs solve the print inflation trap is one. The second inquires about the fear of government spying on people transactions when CBDC is implemented. If the transaction is legitimate, there should not be any fear. If they are trying to avoid paying huge taxes and want to hide income, then there would be fear. Third and fourth questions are from the same person, and they inquire about the currency competition in the sense of fiat versus crypto could deliver price stability and a lower inflation level. And finally, how would a CBDC affect the bank intermediation?
Thank you very much. I'm going to open this question or throw this question to the presenter. Well, we'll start by Professor Isaac. Any question you want to pick, that's fine.
Very, very quickly, starting with Stephen Cecetti's point, I believe that when the CBDCs are adopted, the cryptocurrencies have to be adopted as well. I mean, there is no way out. I mean, you cannot just, I mean, it's a sovereignty for sure, but there will be even more interest to have at least a couple of cryptocurrencies, including Bitcoin. I don't consider them like completely substitutes because the logic of having CBDCs just to kill the cryptocurrencies is by nature is actually justifying the cryptocurrencies, I believe. Certainly, CBDCs will change the intermediation, and more importantly, it might even affect, I mean, right now we are thinking about the CBDCs for the payment reasons, but I couldn't have the time. CBDCs can be used for monetary policy related reasons. Remember this zero lower bound case, right? I mean, this central bank monetary transmission mechanism was not working. We had all sorts of operation twist and so on. Even this MMT approach, modern monetary theory, people came up with this background of 2008 crisis. But if we had CBDCs, probably many of the central banks would use more targeted monetary policy. They will say, okay, I generate a new form of money. You just use this for consumption. And you will just use this to buy milk even. It could be used for development purposes, by the way. We had a couple of papers how some digital currencies can be used for development purposes. But still, it will be a completely different system. Once you start, you don't know where to stop. It is like an AI thing. I mean, we should be really fearful. In that sense, I agree. It's like a nuclear power thing of Stephen Cecetti. So
thank you, Professor Isaac. We have a couple of minutes for both Professor Lee and Professor Cecetti. Professor Lee, if you want to jump on any of the questions.
Just 1-2 minutes from all the questions. I don't know much about MENA on the carbon credit, but I think it's important to look for the whole development of SME and equitability. We need to start looking at transition finance and embedded finance to ensure that we have enough resources and financing for SMEs and entrepreneurs to transform the company for us to have a better climate situation. And as to the pricing of crypto, it's a very difficult question, because a lot of time is based on the network effect. And if you don't see the network effect, then the crypto should worth nothing. But that will take time to tell. And we have to look at that as a market price. Is it a bubble for 13, 14 years? The judgment is still out there. As to CBDC, we need to make a difference between privacy and secret. We may not have any secret of tax evasion and so on, but we do have privacy of what we do, and we do not want the criminals or anyone to peep into our privacy. And perhaps if a criminal take over CBDC, they can control our life. And in terms of fiat versus crypto on stability, for the smaller countries, this is a real problem, right? When you say stable has to be referenced to an anchor. Is US dollar stable? We don't know. Okay, it has been stable, but will it be stable? We are not too sure. But for smaller countries, it's a real problem, right? It has a lot of small countries. You have a weak balance sheet. If they have no US dollar as a reserve currency, it's not stable. Do they have alternatives? That's a good question for inflation. And fifth one, on CBDC affecting bank intermediaries. That's why a lot of countries do not advocate interest rate for CBDC, because it goes directly to your wallet. And I wanted to say earlier on is that wallet is the next big thing. Using wallet, we can know the identity. Using wallet, we do not need possibly banking license in the future, but wallet license, especially in multi-party computing, wallet, and so on. There are a lot of new technology that can solve the current AML, CTF, and other problems. Thank you.
Thank you, Professor David Lee. Professor Shaketi.
I know we're over time, so I'll try and be very, very brief. So
Yes.
the first question is really from one of the questioners in the audience. What is it that gives fiat money value? And I would make two comments about this. First of all money is a technology and a legal structure. And so if I think about what gives money value, the money that I have now, it's the fact that the government ensures that if I give you money, that discharges a debt. And also, if I owe money to the government, it will accept. If I owe the government something, it will take this stuff in payment. And if the government's going to pay me, they pay me with this stuff. So that's the first point. It's obviously important then that people believe that when they take money, they can use it later on as well. But this has to do with trust, and it's more complicated. There were several questions on inflation and CBDC and crypto. So first of all, CBDC clearly makes monetization by the government easier, not harder. So if I say, how easy is it for the government to use money for expenditures? In the case of CBDC, it's trivially easy. And so it would seem to me that creates bigger inflation risks than otherwise. On privacy, I think I agree with Professor Lee's point, which is that we have different levels of privacy. And the real issue with privacy, it seems to me, is whether or not we have legal systems that protect it so that governments can find out what they want to find out if they have cause. If they have evidence that you're doing something that then requires that they get that knowledge, that then they get the knowledge in order to prove that you're breaking a law or that you're evading taxes or something, which is of course breaking a law, then they can get it. But overall, I think that's anyway, this has been a wonderful conversation. We could go on for hours, I'm sure.
Sure.
So thank you very much.
Thank you, Steve, very, very much. I think we really had a very much comprehensive presentation for this issue. It's, as you see, it's very critical issue of the day. We have great experts from all over the world. The dollar writes on it, Steve, this note is a legal tender for all debts, public and private. So that's the value. Of course, when I ask my older professor why we accept the dollar, if it is fiat, they said, or he told me, we accept it because people accept it. That's it. Before we leave, I'm gonna ask Steve a question that everybody here, I think, interested in, and this is now, it's not in the session. This is over and above. So Shireen, don't punish me for it. I'm gonna ask Steve if they stay a couple of minutes to let us know what is the feeling about what is now being going on about the race between the dollar and the yuan, the Chinese yuan. A lot of people are writing is going to take away from the dollar as a universal currency. What he sees the future of the dollar in the near future. If you have any comment, Steve, I will be very appreciative.
Sure. So you know me well enough, Hassan. You know that I'll at least try to I'll at least make up an answer to any question that you have. This one I've thought about. So I think that the answer that I have is that the dollar is that displacing the dollar will be quite difficult and quite costly. So at this point, something like half of the of international trade transactions, at least as far as we know, are invoiced in dollars. Those are the ones we know about. Almost 90% of foreign exchange transactions have one leg as being a dollar. That means if you want to transfer from one currency to another, you almost surely have to go through dollars to do it. And the other thing is that as we teach in the most introductory economics, having a numeraire, a unit of account, is extremely valuable and efficient. And having one currency, you could have maybe two as a unit of account, makes sense. So the question isn't about displacement so much as at this point as about another currency coming along and possibly splitting the world into two. So that's more how I see it. But then the question for the yuan is whether or not China will create a convertible currency. I'm not sure exactly how you have a reserve currency that's not convertible. And how is it that you have with a financial system that's robust sitting behind it? So at this point, keep in mind that the U.S. dollar, as you showed me a U.S. dollar, so that was very good. So I like to wave around these things in class and stuff. They're very useful props. But if I look at the world and ask myself, how many short-term liabilities, US dollar liabilities, are issued outside of the United States right now? The answer is that there is a US dollar financial system outside of the United States that is larger than the US banking system. Now, I realize you may say, well, the US banking system is shrinking, but that's not the case. The US banking system is close to 100% of US GDP in terms of its total assets. There are dollar liabilities in the range of 20 to 25 trillion US dollars issued by financial institutions, short-term liabilities outside of the United States. So it seems to me that we're a long way away from the US dollar losing its reserve, its status as, in some sense, the world's transactions or nominal unit nominal account. Now, I just want to be clear that I'm not advocating that what the U.S. is doing is good. I'm describing the circumstances, I think, in the environment in which we live. The U.S. could screw this up and make everybody's life extremely difficult in the process. But at the moment, I don't see much of a future for another currency.
Thank you. Thank you very much again, everybody. I appreciate your coming in, and thank you for all the questions being asked. And one last round of applause for the presenter. Thank you very much. See you, Steve, in Cairo.
Bye-bye. Thank you very much. This was wonderful.